Welcome to the Real Estate 401k Show. Here are your hosts, Ryan Gerdes, Mike Weinstein, and Justin Frederick, helping you build a legacy of wealth through real estate. Powered by the Recon Group at West USA and the Frederick team with Fairway Mortgage. NMLS number 625918.
All right, guys, finally some incredible news in the lending world. As we have been saying for months and months and months, we do expect by the end of the calendar year to see rates start ticking down. And Justin, we are here, and we've seen rates drop a little bit, which is obviously great news for our buyers, great news for our sellers, and great news for our investors.
That's right. We've seen a difference of about 0.5% in the last 7 days. So we started seeing this fall about 2 weeks ago, right after the Feds met.
What do you think that meeting is like? Like when the Feds get together.
I'll bet it looks a lot like this.
Like this.
I mean, I don't know. I envision them at some like expensive steakhouse in D.C. and eating big fat steaks and drinking expensive bourbon, which I'm
on us.
Not yet mad at, but I anticipate it's on us. Yes.
Right. Mm-hmm. Just helping out inflation a little bit there,
Yeah, keeping their servers
keeping
happy.
retail sales up there.
Yeah, for sure.
But anyway, so I sorry that I interrupt. Actually, I'm not sorry. That's what I do.
We know.
So rates dropped.
Now, a lot of people concerned that we've already locked in their rate weeks ago and wondering, how are we going to take advantage of these new rates and do we need to switch lenders in order to get the lower rate? And in fact, Fairway Mortgage offers a renegotiation policy to their interest rates to where we can do a one-time renegotiation to the interest rate and drop our clients into a lower rate. But what needs to happen is the rates need to drop a minimum of 0.25% in order for us to take advantage of this policy. And we've seen it. We've seen it in multiple cases, and we've been working hard to make sure that we're getting our clients that are closing soon into these lower rates, and our clients that are closing maybe later in the month or in December, we're kind of holding and letting them decide what they want to do because we can only do this one time. So it's a big deal, and a lot of our clients are wondering if this eliminates them from the buy now, refinance later. And
well, we'll talk about that in a minute, but you had mentioned that this is something the renegotiation rate or whatever you called that was something that Fairway is offering. So would it be safe to say that not all lenders are offering it? And so if we have listeners that are locked in somewhere, they might need to talk to you. They might need to go elsewhere to be able to get a better rate.
I would say the majority of the lenders do offer this policy. However, we've come across people that don't have this policy. So absolutely, it'd be more than happy to discuss interest rates with anybody out there. And we don't even have to do a credit pool to check out where you're at. We just need to know what score was pulled from that institution so that we can give you an accurate finding on what that interest rate looks like.
I mean, when I hear these types of things, like we've been seeing the interest rates go up, and then just like, oh man, then just relentlessly hitting us again. Is this an actual glimpse into them going down, or is this just more like this is a tapering type of event? What are we looking at here?
Yeah, so I don't really want to put it out there that I think that we may have seen our peak, but we've been waiting for certain things to happen, job numbers to come in lower than expected, unemployment to go up, for the Feds to continue to hold off on raising rates. And we've seen that happen multiple times now in a row. So we may be at that point. I don't want to say for sure yet. We're going to have some more information coming out this week that will really kind of determine what that looks like. Now, something that I'm afraid of is at this time of year we start seeing seasonal employment come across for retail sales, right? So you start to see people hire people seasonally. Now, hopefully they're filing that correctly when they're doing those job postings. If they don't file it correctly, it's going to look like it's regular jobs coming out. And so we've seen that in the past, right?
And we've had issues with it in the
We
past
have.
because they're trying to transition over into a full-time employee, but they still have that seasonal kind of tag, if you will.
Right. We need them to tag it as seasonal job listings so that we don't
see
account for that.
a tremendous drop in unemployment, because my understanding is one of the factors that's been impacting the increase in rates is because unemployment numbers have been going down, and that we need unemployment numbers to go up for the feds to want to lower rates, which makes no sense to me. So let's take people who are now working and have good jobs and make it harder for them to buy a home.
Right. Like we're trying to trash the economy before we start bringing it back. I mean,
Well, you got to demo it before you can remodel it, I suppose.
It's a fix and flip, man.
right.
All right, if you'd like some more information about loan programs, where interest rates are, how they impact you, and you want some more information in this ability to be able to renegotiate your rate, we want you to reach out to us. All you got to do is text the word loan to 623-AZ-RECON. That's loan to 623-AZ-RECON.
So as we keep going a little bit further down this, and let's just say hypothetically we're in Q1, Q2 of 2024, and we start seeing more of a trend where there's more of a down step rather than an up step, and maybe we're at PARS 7, but just hypothetically, let's say I have an 8% interest rate. I just bought a home in the past couple months, and that's where I am. Me personally, my model is I want to have it at no more than a 3-year break-even point.
Mm-hmm.
When do people start thinking about refinancing?
Okay, I love that question.
And also, and I want to throw the other thing into the mix is we're seeing people who've done 3-2-1 buy downs or 2-1 buy downs, that rate now adjusting and going up.
Yeah.
Right.
So to answer your question, each situation is going to be unique, but if we know that rates are going to continue to go down, what we may try to do in certain situations is do a free refinance, meaning we're taking a higher than standard interest rate to pay for all the closing costs, but it still saves them on the monthly payment so that we can, one, save right now while we're waiting for it to hit the bottom, because it didn't cost them anything to do that refinance, right?
But I only get one free refinance.
Well, no, I'm not even talking about.
Okay.
Let's say that I didn't do the initial transaction. Well,
Okay.
I may use premium pricing to just cover all the costs, which means taking higher than a par interest rate so that we can cover those costs
Got it.
and keep riding out the lower rates. And we've done this in the past where we continue to do that until we feel like it hits the bottom. Maybe we refinance you 2-3 times and we save your information, so it makes it really easy to do. But you're not getting charged anything. You're getting a lower interest rate. Your payment's lower. And so it might make sense in that level. Now, to answer your question on the 2-1 buy downs.
My name is Mike.
To answer Mike's question on the 2-1 buy downs or the 3-2-1 buy downs, they're already getting an advantage of 3% lower, maybe 2% lower than the market rate. We may want to ride that out for a little bit longer,
Right.
Before we pull the trigger on that. We probably want to get closer to the bottom before we pull those triggers. But that's something that we'll stay in touch with those clients. And again, it depends on their situation and where they initially locked in at, and how much money is left over in that escrow account from those buy downs.
But aren't we using up the bulk of our escrow money on 3-2-1 buy downs earlier on in the 3-2-1?
Yes.
So because obviously they're subsidizing it down 3 points the first year, then 2 the second. So why would it make any difference?
Well, so if you're, let's just say you're 8 months into that 3-2-1 buy down, but rates are moving what seems to be a fast pace. It would be something that's easier to hold back from doing, just because your monthly payment, your monthly liability is so much lower.
It's already baked in there.
Correct. And at the same note, you have so much money in that escrow account. We may be able to do it earlier and use that money for a permanent buy down to try to hit those end game numbers, but probably not so much.
Okay.
Does that make sense?
Yeah.
Okay.
Well, there's a tremendous amount of strategy that goes into what mortgage program that you're going to select and the type of financing. And it's not just as simple as clicking a button on Facebook and talking to some rep in some other part of the world. There's a lot of strategy that goes into it, especially when we're considering our future wealth. And we want to introduce you to Justin and start building that strategy. All you got to do is text the word loan to 623-AZ-RECON. That's loan to 623-AZ-RECON. So more specifically, we're talking about the buy now, refinance later program. And I want to kind of get into some more of the details on it, because Ryan, the three of us, what we've been preaching is this concept, because if rates do start dropping, home prices are going to go up. And so this is the time, in my opinion, to lock in a home at a better deal, get those seller concessions, because when rates do drop, those things are going to go away. Case in point, Ryan and I, we're working with some clients right now. They're in escrow on a beautiful home over there right off the Wigwam Creek golf course. Fenced, the wrought iron fencing. You can see the golf course. It's got the pool. It's got the spa. It's got the big windows so you can see it. It's got everything. And the price that we got it for today, I told them, I said, if we wake up 9 months from now and interest rates are, let's say, in the mid fives, I said, this house is going to be instantly worth $100,000 more.
That's awesome. I mean, for sure.
So the strategy is to buy now and then refinance later. So walk us through the details of that.
Okay, so program is you buy now, pay the standard closing costs on the property. While the market is still thin with buyers, you can obtain properties for maybe a better value, maybe get closing costs included in that as well, so that the seller's paying for your closing costs. So you're paying standard fees, although a seller may pay for some of them. And then later on, you have until the end of 2025 to refinance with no lender or appraisal fees, meaning that we can do that refinance, drop you into the lower rates as expected. Although we don't have a crystal ball on what's going to happen and where the bottom is. There's people that are saying it's going to be in the mid fours. There's people that are saying high fours. There's some that are saying we're not going to get past the low fives, but we don't know what that looks like. Now, we can generally tell from what's happening in the most recent days that where we're headed in the next few days. So that will help gauge us. So that means that you just got to stay in contact with us, or we have to have your file that we've completed the purchase on, so we can help you with that.
All right. Well, there's a lot of you that have acquired properties and loans in the last couple of years, and something you really need to be paying attention to is the direction in which rates are going and how quickly they are going in that direction. And a lot of you just need flat out a strategy. What kind of loan program do I need? What kind of loan program do I want? What type of loan program is going to help me long-term build wealth in real estate? And we want to introduce you to Justin. All you got to do is text the word loan to 623-AZ-RECON. That's loan to 623-AZ-RECON.
Thank you for joining us on the Real Estate 401k Show. If you want more information on how to build wealth, click on the link or text us at 623-297-3266. That's 623-AZ-RECON.